Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York on Thursday, May 26, 2016, and this is the Daily Report for gold and silver. Mixed bag in the precious metals markets today, with gold trading nominally lower, silver trading nominally higher. As we look at gold, it is currently trading at $12.1990. Call it $12.20, puts it down approximately $4 on the day. The low $12.1840, so we're just $1 plus off of the low. The high on the day $12.3460, so we are absolutely trading near the lower level of the trading range today. Silver is trading higher, as I said, but we can call this in essence unchanged. It's not even up a penny right now, up 0.007, so 7/10 of a penny at 16.31, low 16.24, high 16.56. Of course, this being Thursday, Friday, we go already into the Memorial Day weekend. And because of that, we are seeing a reduction in volume and therefore liquidity. So traders, first and foremost, I want to thank all those that were able to attend yesterday's live webinar with eSignal. I want to thank you and let you know how humble I felt to have the kind of turnout that we did. Almost 200 people. I recognized many names and many of our subscribers that listen to the show on a daily basis be able to actually come in and listen to some work that we have done live. For those of you that were unable to watch that live webinar but wish to see the recorded version of the webinar, that is now available. That is under yesterday's posting. So simply go to yesterday's posting and you'll be able to view it. Now, what's going on with this market? Obviously, ever since the Federal Reserve came out and said that an interest rate hike in June is not off the table, it sent the dollar flying to the upside, precious metal under tremendous pressure, coming off of these highs at about 13.05. As I said, we're currently trading roughly at 12.20. So over a $80 decline per ounce of gold. And what I'm looking at, and as you know, I have been really under the model and belief that this most recent correction, once we broke a couple of critical areas, 60 being one and really 1244, that being this 23% retracement. But once we broke through this particular price point, and you can see what a vengeance it ran through it with. In other words, you can see, let me get my pointer up, but you can see these series of lows that were kind of supportive of the market that came in just prior. When this market breached that point, it breached it with a flurry and it had a rapid and strong decline in the market. My sense at this point is that we probably will not see any kind of support in the market till about 1208. Now, I could be wrong because we do have a minor support level roughly at about 23, but I don't think that that's going to hold. We're actually trading a little bit under that. In terms of the way I am looking at my current Elliott wave count, I believe that right now we are absolutely in a B wave. I believe it's going to be a shallow B wave, and what I'm looking at is this: as the market came down and hit these lows at 1045. If you recall from our big picture chart, that concluded a major A, intermediate fifth, minor fifth. That takes us, concludes the A. Now we're in a B. Now in this B, at this point, what I think is that we had our 1, 2, 3, 4, 5, and that completed an A. Actually, it's a subcount A. From that subcount A, we then had that correction B taking us in another compression triangle. And then I believe that that last spike up completed the A, and this would be our minor A right here, subcount behind it. And one of the rationales, as I looked at the last part of the rally, we certainly cannot label this wave 1, wave 2, and wave 3. Wave 3 cannot be the shortest of any of the impulse waves, one. Secondly, we're in a B wave, and in a B wave, it's a corrective wave, and we are going to be looking at an ABC scenario, both in terms of the macro as well as the micro scenario. I think that we're going to have a good opportunity to buy this market, but I think that patience in this case is going to be a virtue, and that I'm looking in terms of price structure, as I said, roughly at the 1208 area. I think that at that point we will have completed this current correction and we'll move back into rally mode. Again, long term, the big picture, I'm still looking for this market to move to 1400, 1450, but that's a multi-year move. In terms of what I'm looking at right now, a simple sell-off, possibly to as low as 1208, and from there we should see a nice rally moving forward. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Have a great day. Bye-bye.